Hi everyone and welcome to the midweek market update from Smack the Markets for Wednesday the 17th of June 2020. So this week we've had quite an interesting week on a few different fronts. We've had continuing growth rates in certain US states, six in particular, some high population areas like Florida, Texas and California. We've also had a breakout in Beijing, which is very concerning and has caused flights to be stopped into there at the moment, or 60% of them at least. In other news in geopolitical front, we've had continuing tensions and escalations of tensions yesterday between China and India, causing some fatalities. And we also have escalating of tensions between North and South Korea. And we know that communications broke down a few weeks ago with them. Also today, we do have the second part of the Jerome Powell, the Federal Reserve Chairman, his banking committee testimony today. So at this point of the week, we're going to take another look at the Dow Jones and see how that is looking. So first of all, on the weekly chart, if you remember on Monday, we got that bearish weekly candle for a start last week. It had broken the weekly candle, it gapped down, and our bias was short at that point. It closed the gap, and we got some better than expected numbers out of the US on Monday about the coronavirus. They turned out to be outliers, but it continued to rally, and it even rallied on Tuesday as well. And we got some really good numbers about core retail sales and retail sales yesterday that was vastly better than expectation and caused a further rally. So everything looking good here. It's almost regained back all the losses from last week and a clear window up to that 27,000. Going down to the daily chart, we can see what's going on here. So it's just above this, just after breaking that 26,400 area, a very precisely tested level on this chart. We also have that nice clean window up to the 27,000 as well. So we're expecting this window to be closed and maybe even the highs to be tested here on this one if this continues. Also on Monday, if you remember, we spoke about oil. We had a look at oil, and oil had produced a nice bearish candle from last week. And if we look at it there, we can see the significance of that candle. We have the $40 mark there for a start, and we can see the significance of that last week and even the week before. And even if you go back as far as here, it also is the high of that week. Now, that also lines up perfectly with the 62% Fibonacci retracement. So a very attractive looking candle there, nicely in the sell zone. And we were talking about breaking the lows there and looking for short opportunities below that. Now, our bias hasn't changed on this, just the price has rallied a little bit in the last 2 days. It's gone up to the higher part of this range. But if this does get close to the lows, or if it does break the lows, would be very interested in this. So the bias hasn't changed on that one. Another one that's looking a little bit better at this point of the week is silver. So if we take a look at silver on the weekly chart, first of all, we can see what happens when it gets up to this $19 mark. Very strong rejections of it, very precisely tested level as well. And we can see the last couple of times there, the strong rejection we got. Now, it happened two weeks ago as well, rejected off it very strongly, brought it all the way down to this 1750 area. Last week, then it tried to rally and it ended up closing very close to that level as well. Now, it did manage to break it this week already, but it is back just above it at the moment. Now, if it does break that, we will be looking for short opportunities. And here on the daily chart, this is the kind of action we're getting, almost a head and shoulders kind of formation at this point, and price just the daily candle there just above that level at the moment. So if it breaks that, we're looking for this window to be closed down to the $17 mark, another very precisely tested level, and maybe even down to the $16 mark. So everything looking quite good there on the daily chart as well. The mid time frames, trends have formed here, moving averages getting into formation, particularly on the 8-hour chart there. We have a nice bearish candles there getting produced at the moment. The low is very close to that 1750 area, and if price breaks that, then we'll be looking for short opportunities below that. Also on Monday, we looked at the dollar versus the Canadian. So on Monday morning, if you remember, it had broken the high of the weekly candle, and our bias was long at that time, and we were looking for this window up to around about that 38.50 area to be closed. That didn't happen. We didn't get a rally at all. It completely reversed. And now at this point, if you look at the daily chart there, we've gotten a few candles in a row, rejecting the highs in the sell zone, everything looking quite nice. The lows of yesterday's candle very close to that 135, very precise level. And if we do get a break at that, then we'll be looking for this window down to the 134 mark, which is another very precise window on this, and maybe even that low there on the daily chart, which is just above the 133 area. So if it breaks through that, we'll be getting looking to get short on this. You can see the 4-hour chart there, changing trend, indicators converging, downside momentum, and everything looking very good on that one. So that's the way things are looking at the moment. We hope it helps, and we'll be back next Monday and see how things are looking at that stage. So speak to you then.